All right, let's get started with the market open. We got a lot to talk about. I think we'll start off with macro. So first off, the 10-year's down. The 10-year is finally down in the way that we needed to get down. And when I mean down, I mean we're back at 4.5, folks. Look at that, 4.566. Nicely down from 4.8 literally last Tuesday. Obviously, we got CPI data, which was incredible, and that helped us get this 10-year to start falling. It's hard to be incredibly bearish when you see something like the 10-year fall as aggressively as it's falling. Now, the dollar is not falling as nicely as the 10-year, but the dollar is coming down 108.5. It was at 110 last Tuesday as well. The thing that is very volatile about this, and then I have a lot of charts that I want to show that are highlighting kind of the broader macroeconomic bull case right now, is that this dollar spiked yesterday when Trump said on February 1st, last night at approximately like 8:15, he said on February 1st, they're going to put a 25% tariff on Canada and Mexico. As soon as he said that, the NASDAQ futures fell off a cliff, the dollar spiked, and it was one of those things where it's like, okay, so the market is obviously telling everybody they do not like tariffs. And because they do not like tariffs, they are willing to take the macro in the context of the dollar to higher highs if they think that the tariffs are going to be inflationary. Now, whether you believe the tariffs are going to be inflationary or not is irrelevant to what the macro thinks or what the market thinks. Eventually, we'll find out how inflationary or not inflationary they are. But the market's telling us they don't like tariffs. Even Trump, during his speech in the inauguration, when he mentioned tariffs, the market got upset about that, and we saw a little bit of volatility. We saw Bitcoin take a dip, all that stuff. So I'm conflicted on if tariffs are actually going to be positive or not. Like, I think there's a bull case for why we need tariffs, but in terms of like the dollar and the 10-year, so far they're saying they don't like tariffs. So I don't think that's necessarily an issue because earnings are what matter, and we're going to talk more about how earnings matter. We had a bunch of earnings this morning. We have a bunch of earnings after the bell. We have United, Netflix, a bunch of stuff. But if we are paying attention to those two indicators, the 10-year and the dollar, then we're going to have to pay attention to how Trump implements tariffs or how he talks about tariffs, or if it's really just a bargaining tactic and not an actual policy, because I do think that's going to have an impact on how the market reacts to it. So that's just something we got to keep our eyes on. But outside of the dollar, kind of still staying elevated, markets really liking the momentum from Trump. And here's some analysis to kind of prove why the market's liking this momentum from Trump. Let's take a look at some of these charts. From Bank of America, investors cut their allocation to bonds to the lowest since October 2022. I know we have a lot of money in money market funds, and last week we did see 60 billion leave in outflows from money market funds. So we are seeing some money come out of the sidelines, but still, if we have the lowest allocation to bonds since October 2022, which is when we bottomed in terms of the 2022 bear market and people started buying equities, if we are October 2022 inside of January 2025, we've got a lot higher to go. Now, this chart doesn't necessarily say that's the case, but still, it's one of those signals of like, okay, so investors are saying that bonds are not where they want to be. Maybe they want to be in equities simply because bond yields are not going to be as competitive with long-term stock returns. Then here's another chart right here. This is Goldman Sachs Global Strategy Conference Survey. They asked people what is likely to be the best performing asset class. 68% of the people they surveyed said stocks. You had 19% say commodities, 10% say bonds, 3% say credit, 1% said cash. And that's very interesting because in 2024, only 42% of people said that equities would be the best performing asset class. Now 68%, you can interpret that as bearish because everyone's super bullish and therefore you want to go the other way. Or you can interpret that as animal spirits are absolutely back. Stanley Druckenmiller was on CNBC yesterday talking about that as well. And if those animal spirits are back, this is one of the reasons why Robinhood's catching a bid right now. The market's like, all right, everyone's going to start trading again on Robinhood in particular, and that's going to fuel their growth. That is one of the reasons for why we're seeing the pre-markets and the broader markets do well in January. Here is another chart that was very important from Goldman Sachs. President Trump's Inauguration Day policy announcements on tariffs were more benign than expected, even if the market's very volatile towards the specifics of what he says sometimes in press conferences. And they said, we are lowering our odds of a roughly 20% tariff hike on imports from China from 90% to 70%, but maintain it as the base case. So Goldman Sachs is saying, hey, stocks are still pretty damn good, even if you assume there's going to be tariff hikes, but we are lowering the probability that Trump's going to be as intense with the tariffs on China in particular, like he said he was going to be in the campaign trail. And then here's the last chart right here. Actually, we got two more charts. USA is 67% of the global stock market as President Trump returns to the White House. So for all the international investors, the reason they're piling money into U.S. companies, the Max 7, is because the U.S. is the majority of the stock market. We got Europe that's not really growing as much. Japan's kind of growing. China's actually doing a lot better over the past couple of days. They have some more stimulus that's taking into effect. But the US is where you want to be. I mean, it's just the place you want to be if you want to get money compounding in the stock market. And then finally, I know earnings are just getting started, but here's what Bank of America said. While still early, reported companies beat consensus EPS by 10%, double the 5% beat at this time last quarter. So Q4 earnings are already beating by 10%. This time in Q3, last quarter, we were only beating by 5%. The banks are firing on all cylinders. AI CapEx likely continues. Signs of manufacturing recovery are also getting stronger. Netflix is reporting today. United's reporting today. Charles Schwab, MMM reported today. They had good earnings. We'll look at that in a second. But so far, S&P 500 companies are beating on earnings. And as long as they continue to beat and continue to guide higher for a beat, we're probably going to see more momentum from the earnings market right now. So pretty exciting to see a lot of this momentum that we're getting right now. Shout out to Farzad. Thank you for being here, my brother. Too legit to quit. Love you, bro. Thank you for being here, being part of the show. I did a podcast on Farzad's channel like a week ago that was posted, and we talked about Elon, FSD, all that good stuff. So you guys can check that out if you want to hear me talk about my revelation with FSD. Rango says, I think the only reason we are not tanking on this tariff talk is that the market trusts people in the cabinet. You know, that is a fair point. Scott Bessent, although he is bullish on tariffs, I think he is very properly, and if you watch the confirmation hearing, navigating how he talks about the idea of tariffs. And so I do agree with that. Like Trump, flat out said yesterday, we're going to do 25% tariffs on February 1st. And as like part of the reason the market's probably not down right now is because they just don't believe that. And they probably don't believe that because they think his cabinet members might not allow it to be that quick. Sachin says tariffs doesn't exist in a silo. The idea of tariffs is eventually to put manufacturing on track in the USA so it triggers sentiment other places and for consumer taxes to have to be cut to balance it. I agree. And this is why I think the market is so volatile in the context of tariffs is like there might be a lot of benefits to it. When you look at the cost benefit analysis, there might be a lot of cost to it, which outweigh the benefits, but no one really knows. Like no one really knows because we don't know exactly what Trump's mandate is going to be. Is it going to be 25%? Is it going to be 5%? Is it really just a bargaining tactic? And so as for now, the market's like, okay, fine. We're not going to like go crazy and spike the 10-year back up to 5% on the idea that tariffs are going to be inflationary. But every time he mentions it, the market gets scared. And so that will be something that I think we have to watch out for no matter what going into the next at least the next 4 weeks, definitely over the next 4 months as Trump gets into his first 100 days. We can't do the bell for Hood yet, guys. The market's got to open. We can't do a pre-market bell. We got it. We got to get 50 when the market opens. We never do a pre-market bell. The market's got to open. We got to touch it when the market opens. And then we will definitely get the bell for Hood. But $50 is pretty incredible. And one of Hood's competitors, Schwab, had a pretty good earnings as well, which lets you know why the market's probably excited about something like a Hood. Schwab is up, 7%. Schwab doesn't move like that. Schwab doesn't move 7%. That's incredible. So there you go. 80.95 in the pre-markets on Schwab. Robinhood right there, 49.88 up 3.66%. Apple's down. We'll talk about Apple in a second. And then Palantir, 1.95%. So why is Palantir up? I think Palantir's catching a bid off this idea that Trump says he's going to focus really heavily on defense. The executive orders yesterday were pretty massive for Trump. He signed about 100 executive orders, and he officially established Doge. Doge is now a thing. So that was established last night. He signed a bunch of these executive orders, did not do anything on crypto yet, which has some people, wondering when is that coming, but I think it's coming hopefully soon. But Doge officially has been initiated and Elon is now the leader of that. You guys are saying Vivek stepped down. Is that true? Did Vivek actually step down? Vivek Doge. I heard the rumors of that. Oh yeah. He said, it was my honor to help support the creation of Doge. I'm confident that Elon and team will succeed in streamlining the government. I'll have more to say very soon about my future plans in Ohio. Most importantly, we're all in to help President Trump make America great again. Yeah, that sounds like he's not going to be part of it. He is going for governor of Ohio, right? It seems like that's what he's going for. Yeah. All right. So look, I don't think that's a bear case or anything. I think it was good to get the idea up and running. And now Elon will have till July 2026 to be able to enact the reforms that he wants to get enacted. Officially on the Doge documents, it says that the thing will terminate by July 2026. This is the document right here. So the organization will report to White House Chief of Staff, Susie Wiles. Each federal agency is tasked with setting up a Doge team of at least 4 employees. So that means the IRS, the FDA. All of these guys are going to have like this little Doge consulting for a team of 4 people that are going to be just like, there following along everything that they're doing. They have to do it within 30 days, and the team will typically include 1 engineer, 1 human resource specialist, and 1 attorney, and then 1 team lead. Doge will immediately establish a government-wide software modernization initiative. I mean, who knows if a company that rhymes with Palantir might be involved in that? We will see. And then Doge is established as a temporary organization in accordance with Section 3161 of Title V United States Code. They will terminate on July 4th, 2026. So Elon has about 1.5 years to figure this out. And if he can do it effectively, maybe we do end up potentially saving some money. I'm still a bit skeptical on this. Like, look, I really hope it works out. Do I think they're going to save the government massive amounts of money and like get our deficit to a surplus? I just don't know, because you've got Congress, you've got Democrats and Republicans to deal with. Both parties want to spend money like crazy. I would really hope that if every agency has this like Doge consulting partner with them and they can guide them on what to spend, what not to spend, and really shut down stupid expenses, maybe there's a chance this works. I wouldn't doubt Elon, because Elon has put his mind to it. He wants to get things done. Elon has got things done in the past. So if he's able to figure this out, and he was very excited yesterday in his inauguration speech to get the job done, then maybe it becomes a real thing. Also, if it actually does work, I feel like Doge could get extended to become like a legit agency and like be one of the hall monitors to literally micromanage all the money we spend. Because at this point, we need a hall monitor because this debt is unsustainable. And like, we cannot have $50 trillion in debt one day. Right now, we're at 36 trillion. So maybe it actually does play out long term. Maybe it does. All right, so that's what we had in the context of the macro. Lots of amazing stuff that we're seeing in terms of earnings growth. We'll talk more about earnings in a bit. Real quick on earnings, we did have Schwab, which we talked about. They're up 7%. They beat on EPS and revenue. Let me actually pull this up real quick just to get the actual numbers. 3MM, they beat revenue by 0.5% and then EPS by 1.2%. This is their stock right now. I think they're up. MMM, they are up 4%. Okay, so the market likes it. Again, these are big companies that don't move that much. And then we had another one report today outside of Schwab. We had DHI, DR Horton. That one, beat revenue by 7%, EPS by 10%. This is a home builder. That one doesn't move that often either. That's up 3%. And that's up 3% because KB Home also showed really good home building momentum. So even though housing starts are not as strong as they were a couple years ago, even though they are the strongest they've been since March 2021, March 2019, they were at all-time highs. We are still seeing home building start to catch a little bit of a bid. And maybe this is the sector, as inflation comes down, particularly shelter inflation comes down, the 10-year comes down, mortgage rates comes down. Maybe that's a sector that catches a bid. I know Tom Lee does like the home builders as one of those sectors that's been kind of disrespected for the past couple of years because of high rates. And now people start building a lot more houses. Lennar, is Lennar up on this news? Lennar is down 7%. Wow, that's weird. Looks like the market's interpreting DHI's green as Lennar's red. That's weird. You would think they would move together. Interesting. All right, well, DR Horton's up, 3M is up, and then Schwab is up 5% currently right now.